Let's move. Yep. Senate conferees will come to order. Just for purpose of my colleagues here, what I'd like to do is, while the House isn't here to respond to this, I believe we have an offer we can make to the House on Title II, the orderly liquidation title, and then I'll go through and describe the counteroffer, which has been, I think all members have had a chance to look at this. At the conclusion of that, I'm going to ask to recognize Senator Leahy of Vermont, who will offer a proposal on Title 15, and then barring something to intervene, there's Title 14. We've got provisions we can accept. There are a couple of provisions I suspect may provoke a little debate, and so we'll get to that, barring something else that would intervene. So let me begin with Title II, if I can. The House has made a counteroffer yesterday to Title II to us. And as you know, our ability to proceed on the Senate floor with the financial reform bill was based on a bipartisan compromise on Title II provisions to end too big to fail. I've said this in the past on numerous occasions, said it during the lengthy Senate debate. I want to commend my colleague from Alabama, the former chairman of the Banking Committee, Senator Shelby, and his staff, and my staff as well. A lot of long, hard effort went into coming to a final understanding and agreement on Title I and II, but particularly in Title II. And so we feel very strongly about it. It was the title, the agreement, that really broke the logjam that allowed us to then have the lengthy debate, which we did on the floor of the Senate on the financial reform bill. We've consulted Senator Shelby, the ranking member, on the House counteroffer and agreed to certain changes requested by the House. We accept the House offer to include the Federal Insurance Office as a triggering authority for orderly liquidation of a financial company. That includes an insurance company as its largest subsidiary. We accept the House offer to require a mandatory repayment plan with a modification to give the FDIC immediate access to liquidity if necessary on day one. We accept the House proposal to replace a 3-business-day stay on the rights of counterparties to a qualified financial contract with a 1-business-day stay. We accept the House offer to use its risk matrix in place of the Senate's risk factors if an assessment on large interconnected financial companies is necessary to cover any shortfall in a liquidation. We propose technical modifications to conform to the language to fit the Senate framework for Title II. We also strengthen the Council's role by providing for the Council recommendations concerning the development of the risk matrix to be used for assessments. However, with all due respect to our House friends, we cannot accept the House offer to create 2 new assessment categories, high-risk and low-risk buckets, which was not in the House bill. The Senate bill includes the requirement to claw back from creditors up to 100% of any payments they may have received in excess of liquidation value. This clawback mechanism would greatly reduce the likelihood as well as the amount of any assessment imposed on financial companies. Therefore, there's little need to create a new assessment buckets. The FDIC will still use the House risk matrix to ensure that the amount of any assessment will vary with the risk of the company. We also cannot accept removing the ex-ante judicial review process. This upfront judicial check was a significant component of the bipartisan compromise to end the too-big-to-fail problem. Finally, we do not accept adding Fannie and Freddie Mac to the group of financial companies eligible for the orderly liquidation process in Title II. Instead, we should deal with the resolution of the GSE issue in separate reform package, which all of us agree on. With that, let me turn to any of my colleagues who would care to be heard on this, if they wish. And if not, I'm going to ask consent that our counteroffer to Title II be submitted to the House. Is there any objection? Without objection, it's so submitted. Now let me turn and recognize Senator Leahy for offering a proposal on Title 15.
Well, thank you, Mr. Chairman. My amendment is based on legislation sponsored by Senator Lugar, Senator Cardin, Chairman Frank, myself, and others. It's not a new issue. There's been 8 hearings on these bills. It's the Extractive Industries Transparency Disclosure Amendment. Apologize for the voice. It's pollen. There are at least 2 compelling reasons to include this amendment. It would require companies listed on the U.S. Stock Exchange to disclose in their SEC filings payments made to governments for oil, gas, and mining. First off, of course, that transparency protects the investment of U.S. taxpayer shareholders. When oil, gas, and mining companies do business overseas, whether it's in Angola, Kazakhstan, Burma, Venezuela, or any other country, they pay those governments for concessions and royalties and other fees. Now, I think U.S. taxpayers should have a right to know what those companies are paying these governments. It should not be secret. And the reason why is clear. There's no legitimate basis for denying American taxpayers access to that information when the foreign government officials and in many occasions corrupt officials have the information. The second compelling reason is the revenues from these extractive industries are vitally important to the economies of many of the world's developing countries. Yet, despite receiving billions of dollars a year from the sale of oil, gas, and minerals, the people of many of these countries are living in squalor. The revenues are used to prop up corrupt billionaire dictators or to fuel armed conflict. We've seen this in Angola, Sierra Leone, Equatorial Guinea, the former Soviet Union, Nigeria, Southern Sudan, many other countries. Our amendment will enable the citizens of these resource-rich countries to know what their governments are receiving from foreign companies, to begin to hold their governments accountable for how these funds are used, and help assure that the sale of their country's natural resources are used to improve health, education, and economic development, not to buy expensive cars and airplanes and offshore foreign villas for corrupt officials. It's good government and transparency. Those are principles we all stand for, and we're always asking other countries to do. It's hard to ask other countries to do this if we can't do it ourselves. And, of course, there's a third compelling reason to support the amendment. As chairman of the State and Foreign Operations Subcommittee, I'm all too aware that we spend billions of American taxpayers' dollars to support economic development in many of these same countries. We're funding their schools, health clinics, and building roads. Many of them we keep their people from starving. But then we ask, what are their governments doing? Selling off the country's natural resources, pocketing billions of dollars for themselves and their families, paid for by foreign companies. But they want American taxpayers to help reduce poverty in their country. And it makes no sense that American taxpayers are paying to prevent famine in Africa when you have foreign officials raking in royalties from U.S. and foreign companies that are kept secret from U.S. shareholders. Transparency is good for U.S. taxpayers, encourages more accountable government, a better business environment for foreign investors. The amendment would apply to more than 90% of the major internationally operating oil companies, 8 out of 10 of the largest mining companies in the world, only 2 of which I believe are U.S. companies. The amendment does not impose an unfair burden on U.S. companies. It's long overdue. Several oil companies already disclose their payments to foreign governments, including French Total, Canadian Talisman, and Statoil in Norway. Newmont Mining, based in Colorado, which is the world's second largest gold mining company, disclosed its payments to foreign governments. The company believes this is going to be good for business because it gives would-be investors more information and reduces corruption. Starting this month, the Hong Kong Stock Exchange will require new applicant mineral companies to disclose payments made to host country governments. The British Parliament has urged similar steps by the London Stock Exchange, where companies such as Gazprom are listed. The International Accounting Standards Board is currently considering a rule to change and make this standard so we can be a leader in this, and I urge the inclusion of the amendment. I apologize for speaking so long, but a number of people had questions, and tried to answer them all.
Well, I thank the senator very much. I want to commend Senator Lugar, Senator Cardin. They have talked to me extensively about this. Senator Brownback, our colleague from Kansas, offered language which Senator Shelby and I accepted dealing with the Congo on this issue, and this is Title 15 of the bill for those who raised the issue of why this issue and this bill, but we obviously created a title to deal with the Brownback amendment, so this was within the scope, obviously, of our conference, and I think very commendable, and obviously deals as well with transparency and knowledge about these issues. So I thank my colleague from Vermont, but I publicly want to thank Senator Dick Lugar. I've had the privilege of serving with Senator Lugar on the Foreign Relations Committee for my entire tenure in the Senate. Been chairman of that committee, he's the ranking member today, and I think we all agree this is one of the remarkable members of the Senate over the time we've served here. So we thank him and Senator Cardin for their efforts, and yours, particularly Senator Leahy. I know you've cared about these issues a long time.
No, I just want to join you in your praise of both Senator Lugar and Senator Cardin on this. Chairman, you know, Senator Lugar did a number of hearings, a very large report on this, and you've been talked to a lot by both those senators. Believe me, so have I.
Any further debate on this amendment? If not, on this amendment, all those in favor say aye. Aye. Those opposed, no. The ayes appear to have it. The ayes have it, and the amendment is agreed to. We're now going to move to for discussion on Title 14. The House has sent us I guess a counteroffer to our counteroffer, whatever we are in the mix of all of that. And let me take a few minutes and share with my colleagues what we're prepared, obviously pending any further ideas, and some of this may require some debate on the counteroffer to Title 14. Item number 1, the House proposal represents some improvements, we believe, to Senate language proposed in our earlier counteroffer to a part of the bill giving some needed flexibility to government entities such as the FHA and VA in determining what mortgages meet the definition of qualified mortgages in the bill. The previous Senate proposal would set a number of conditions for FHA, VA, and RHS in laying out criteria when they are refinancing loans they made or insured in order to promote consistency with the whole anti-predatory lending bill. These criteria include, for example, a limit on points and fees. The House has accepted that language with some drafting improvements with which we agree. Item number 2, I recommend that we accept the revisions to Senator Shelby's very good amendment that are proposed by the House with some changes that Senator Shelby and I have worked on. I want to thank him and his staff for being so cooperative and working on this language. I think the House offer and the response that we've made to it, sending back to the House, resolves the concerns that some have expressed while meeting the legitimate concerns that Senator Shelby raised with his initial amendment. Item number 3, in the base text and previous offers and counteroffers, we work to make sure that the playing field in the legislation is not tilted in favor of FHA and other government programs. This proposal by the House, which I recommend we accept, simply makes clear that the unused portion of the upfront premium charged by mortgage insurance companies must be refundable in cases where the borrower prepays a mortgage in order to qualify for the exemption in the underlying bill. My understanding is that this is already happening in most cases. This is an important consumer protection consistent with the rest of this title. Item number 4, force-placed insurance is hazard insurance services placed on a home when the homeowner fails to carry such insurance himself or herself. There have been many, many abuses documented whereby the loan servicers, who make hefty commissions, I might add, on such insurance sales, force-place insurance on homeowners who already have their own hazard insurance. The base text already places limits on the charges allowed in this practice. This proposal refines that language in a way that is supported by consumer groups, insurance groups alike, and I thank them for it. And I want to thank and recognize Congressman Ken Jorsky and his staff for the good work they did on this. Item 6, again, this is largely a technical amendment to clarify, conform, and perfect the appraisal subtitle of the base text. Item 7, the base text requires that borrowers receive periodic mortgage statements containing certain information, such as the current interest rate, remaining principal balance, and the like. This proposal allows the statement to be in a form of a coupon book as long as substantially the same information is provided. The Kanjorski Amendment, however, I don't believe, this is about the Kanjorski Amendment, I do not believe that I do believe, rather, there may be a problem with appraisal portability. So I'd like to send back to the House an offer with an amendment that directs the regulators I apologize to my colleagues for an update. We've decided to accept the Kanjorski amendment, and this, what it does, it's the one dealing with, this is the portability of appraisals. All right? The following two provisions we accept with a couple of modifications. And this one members may want to talk about. The Senate accepts the House offer to create an emergency fund to help unemployed homeowners avoid foreclosure and retain their homes, with a modification to reduce from $3 billion to $1 billion. And I'm going to ask to modify the circulated copy on this had a higher number, and so I'm modifying the number down to $1 billion. This program has proven track record in Pennsylvania. You may have heard our colleagues discuss this, where for years it has helped unemployed homeowners have that bridge that people have talked about to allow them to keep their homes, to avoid foreclosure until they get back on their feet. This type of program has also been promoted by Chairman Ben Bernanke in the Federal Reserve Bank of Boston. The key to the program is that it provides for payment assistance to unemployed homeowners who have a reasonable prospect of finding work so they can once again pick up their original mortgage and start paying the government for its assistance, which, by the way, they also have to pay back. And that's why the scoring on this is 1/2 of the cost from CBO. The item 2 is the Neighborhood Stabilization Program, and I take some pride in this, having authored this legislation in the Senate, and one that's proved to be tremendously helpful in a number of areas. Congress created this program in 2008 to help communities combat the neighborhood effects of mass foreclosures and abandonment. These include falling property values for neighbors, increased crime, and loss of tax base. The House offer would provide communities with additional resources to preserve and stabilize neighborhoods. I think the need is great. This year, HUD received $15 billion in requests for the $2 billion of the Neighborhood Stabilization Program funds provided under the Recovery Act. Obviously, we didn't meet that. The counteroffer accepts this House offer, and on this one here, we have a counteroffer of, and I asked to modify this as well. It's $1 billion. We share it, $1 billion, $1 billion. We cut it in half from the House request. The Senate counteroffer also makes 2 substantive legislative changes to the House offer, along with technical and conforming changes. First, the Senate counteroffer would restore the state minimum allocation Congress adopted in the original HERA program of the National Stabilization Program. The House offer would strike this state minimum allocation. We don't. As in HERA, the Senate counteroffer will provide each state with at least 0.5% of the total funding. This is important to Senator Leahy, Senator Johnson, and others. With this restoration of funding for states, the state counteroffer also makes conforming change to limit the House offer's definition of state for purposes of grant allocation. This is about rural areas, very candidly. The rural states were not being able to take advantage of this program, and Senator Johnson, for rural state, and others have asked for this so they can have an equal share at their similar problems with stabilization issues in rural communities. So I thank them for this addition. It really is a good addition.
Thank you,
to the
Mr.
bill.
Chairman. Thank you.
The second offer would also permit HUD to use up to 2% of the funds for technical assistance for eligible grantees. These hardest hit communities have been overwhelmed by the onslaught of foreclosures. At the same time, that budget constraints are reducing staff. HUD has adopted an active technical assistance program under the current Neighborhood Stabilization Program. This assistance is aimed at making sure grantees have the expertise to operate this program in troubled and changing housing markets. This small percentage of funds provided for technical assistance will help cities and towns maximize the federal dollars. Let me just say on this issue, again, I think we're talking about big issues here, but and I don't want to get too parochial, but I can just tell you what a difference this has made. Connecticut, of course, is known as being one of the most affluent states in the country. We are. Obviously, that's largely due to 1 or 2 counties in my state. Bridgeport, Hartford, New Haven are my 3 large urban areas. And for people who live in these urban areas with the abandoned properties in neighborhoods, the ability to acquire these properties, rehabilitate them, put them back on the market again, and these places are selling remarkably, have done very, very well. The money then goes back into this, so it creates its own fund for rehabilitation. And again, for anybody who lives in some of these communities that have been hard hit, I can't tell you what a difference this makes, and also how it does begin to stop the hemorrhaging that occurs. There is a domino effect with boarded up homes. I mean, you talk about declining values on a street, you end up with 1 or 2 boarded up properties on that street, It's not just a 1 or 2% reduction in value as you have with a foreclosure. It's 10 or 20 or 30 or 40 or 50% reduction in value with only one boarded up home. Being able to rehabilitate that property, put it on the market, get it back on the tax rolls, just makes a fantastic difference in these communities. So I apologize for getting a little passionate about it, but it's a great program. And again, it's something the House has talked about and cared about. We've pared it back. We cut it half in size. And I urge my colleagues, I ask my colleagues to be supportive of this. And that's those two items. But again, I know that others may have different views on the matter, but I think they have great value and can make a great difference. And I'll open up to any comments people may have. Yeah. Any further debate on these items? If not, all those in favor of making the counteroffer to the House will say aye. Aye. Those opposed, no. The ayes appear to have it. The ayes have it. The counteroffer is submitted to the House. With that, well, we've on this point here, we'll take a short recess until we determine what the next item up that people. We're working on Title 10, and we're not far from on Title 10.
Are you ready on
They ready?
Are you ready?
Yeah. Well, let's take a short. We'll take just a short recess. Don't go anywhere. I'd say to my colleagues, it's not an excuse to leave the room yet. We've got some items we can bring up here shortly.